So many of you are using time frames wrong. And I know this because in my teachings, I see it. I see a lot of people asking questions about where they messed up. A lot of the time, it can come down to something as simple as knowing how to use your time frames in the correct way. So let's get in the charts and I will show you. So something just as simple as your time frames can help you immensely. I'm going to show you a three-step rule, but before we get to the three-step rule, I just want to show you as an example where some people can mess up. So we're on the 15-minute time frame here, and it's not necessarily the time frame that matters, it's just how you're using access to multiple time frames. That's where a lot of people mess up. So for example, someone might want to take a buy here and, without seeing the higher time frames, they might think it's a good idea to take a buy here. Things are looking pretty bullish, and then they will end up losing their money. Now, obviously, this is a stupid trade. No one should be taking something like this, but this happens, and it can happen to anyone. I'm going to show you how to increase your probability of winning trades and your profitability because of that. So something just as simple as jumping to a higher time frame could have saved this person from this trade by realizing that we are at such a high resistance right now. And especially with all these candle wicks coming into the market here, it just goes to show how much selling pressure is coming in this area. And that's something you wouldn't really see if you were on the 15-minute. It's super easy to miss something as simple as that. So let's jump into the three-step rule, and I'm going to show you, just using this three-step rule, how simple you can change your trading game. And if you apply this, you will be more profitable. So here we are. This is the 3 time frame rule, and it goes as this. There was always going to be your main time frame. It doesn't matter what it is, it's whatever you'd like to trade, whether it be the 1 minute, the 5 minute, 15 minute, the hour, the 4 hour, it does not matter. You must have a main time frame, and everybody has a main time frame. So we're going to use the 15-minute as the example because this is the main time frame that I like to trade the most. And now the rule is very simple. So you must find your low time frame. So you must find your low time frame and you must find your high time frame because these are going to be very important to helping you with your trading. You have to have a high time frame for your main time frame, and you have to have a low time frame for your main time frame as well. So to get your high time frame, you want to times whatever your main time frame is by 4. If we do 15 minutes times 4, we're going to get a 1 hour. So that's going to be our 1 hour time frame. So that's the time frame we are using for a high time frame. And now for a low, do the opposite. You're going to divide it by 4. Obviously, you can't get this divided by 4. So what you normally do is round to the closest thing. And what we can do is do a 4-minute time frame, because 16, if we rounded up just to 16, we divided that by 4, we would get the 4-minute time frame. So this is going to be our low time frame. This is going to be our main time frame. And this is going to be our high time frame. Now, each one of these time frames are very important, and they each have their own purpose. So the high time frame, we'll start with the high time frame. So the high time frame is important for direction. This is where you're going to get your directional bias. This is where you want to understand where price is headed on the higher time frames. Because if you know where price is headed on the higher time frames, a lot of your trades that you're going to take on the 15-minute will have a higher probability if you are following the same direction as the higher time frame. Now, the main time frame. Now, your main time frame, this is going to be your analysis time frame. This is everything you know about your strategy, your entry requirements, all of that, your confirmations, your technical analysis. This is where you do that. You do that on your main time frame. This is where you're looking for your rules of entry, your rules to look for a specific strategy or trade that you're using. This is where you do all your technical analysis. This is where your indicators come into play, all on the main time frame. So the high time frame, this is direction. Main time frame, this is where you're going to do most of your analysis. And then when it comes to the low time frame, this is where you're going to look for your entries. This part can be a little bit controversial because this can go both ways. You can definitely enter on your main time frame, but if you want to get better and more accurate and sniper entries, the low time frame is what you can use and what will work best to get your high risk to reward trades, your better entries. But don't worry, your main time frame is just as valid. So these are the main purposes of 3 time frame rule. Your high is going to be your direction, your main is going to be analysis, and your low is going to be entry. If you can follow this, you will be way more profitable. However, there's also, I'm going to tell you now, other things that can really help with each time frame. And this is something that's not very important in the beginning, but as you get better at trading, will want to pay attention to these extra things that can help you on each time frame. So back to the high time frame again, a main purpose that I like to use the high time frame for as well is looking to where you want to take your profit and where you want to place your stop losses. So your TP and your stop loss. If you look at the higher time frames, you can find better places to place your stop loss and take profit because you will get to see the bigger picture of where price will go and where price can come back to, to not hit your stop loss or end up hitting your stop loss. Okay, so we're going to tell you about the main time frame, other perk of the main time frame. But before we get into that, if you are looking to start live trading and you were looking for a broker, or if you've already had a broker and you want to switch it up, you want to use something more better and efficient, highly recommend signing up with Fintura. I'm gonna have a link in my description so you can check them out. But I've been trading with Fintura for a little while now, and I will say I was a big fan of Hanko Trade, and Fintura is just as good, offering some of the great benefits that I liked and love with Hanko Trade. So if you're looking for a broker, go ahead and sign up with Fintura. You're gonna love them. Okay, so the other perk of the main time frame analysis is I like to call this the indicator, because not only are your indicators going to work way better on your main time frame in the whole picture of your strategy, it's also going to give you indication of everything that you have included in your strategy. So obviously, all the analysis is going to be done on this time frame. This is also going to show you the things you need to pay attention to, like divergence or momentum, things of that nature. So the main time frame is going to be the indication time frame, and a lot of your indicators are going to work exceptionally well for your strategy when you're using them on the main time frame. If you're using them on the higher time frame, it's not going to work as well because you might see some bigger indications of different bigger moves that can play out more in the long term rather than now on the main time frame when you're trading in this present time frame of the 15-minute. And now for the final extra perk here, I would like to say that the low time frame for me really just is about those sniper entries. Like you'll see if you start using the low time frame to get in your entries, you will start to see that you can get extra tight stop losses and big risk to rewards. Because you're entering on the lower time frames, you're going to get very optimal entries, especially if you're repeating your entry requirements on the lower time frame. I'll actually jump in the charts and show exactly what I mean. But if you're doing that, you're going to get phenomenal entries. So let's jump on the charts. I'm actually going to show you that. Okay, so we're going to show you just an example to show you how the sniper entries exactly work. So just as an example, let's say the 1 hour is your main time frame. That's what we're using here. Just as an example, a lot of my entry requirements is price breaking a lower high like this. So that would be my analysis. Okay, we have price breaking a lower high. But then what I can do is divide that by 4. So that would be the 15-minute. And then I look for that exact same entry requirement, price breaking a lower high. So then we have another lower high here. So then I'm going to wait for price to break that, which it did end up breaking over here. And then I'd wait for a nice little pullback and then set my stop below. So now we have like a nice 2.5 risk to reward on that. Rather than if I were to only use the 1 hour for entry, it would have gone something like this instead. Price would have came up, broke above. I would have waited for a nice pullback into that. And then my stop loss, would have usually ended up going below here. And then I would have only got like a 1 to 7, 2, rather than getting that like better entry. So then instead of getting that, nice optimal entry, I'm getting a little bit more of like a rougher entry. So it's kind of hard to judge exactly where I should put my stop loss and things like that. But you get a more accurate view on the lower time frame. But yeah, hopefully you guys enjoyed this quick little video. This is just to help out those who want just some extra boost to add to their strategy and trading system already. So try to work on your time frames and your trading will definitely improve.